I know, maybe not you, but I know there's going to be somebody in here. Somebody's going to be watching this thinking, hold on, Mr. Stockhausen. Why do I need to think about passive income when I'm trading and it's going well? I'm making multiples. I'm capturing these swing trades. I'm capturing my trend trades. Why do I need to bother thinking about passive income? Right. Let me tell you why you need to be thinking about passive income. To create financial freedom, as I just showed you, you want to own something that gives us an income. The same concept as a rental property. Everyone understands the concept of rental property because they've seen it before. Thus, if I looked at your balance sheet, but it says assets and liabilities. If I looked at your balance sheet at any point in time, I would see you owned an asset that generated an income. Okay. Now you need to understand a trade is not an income generating asset. A trade is a trade. If I buy a house, think of it this way. Imagine I buy a house, I rent it out and sell it immediately after collecting that month's rental income. Do I own an income generating asset or did I just do a trade? Okay. So I buy a property, I rent it out. After I've collected the 30 days rental income, I sell it. I sell it. I might make a capital gain on that and I get the rental income. Do I own, was I trading or was I doing income production? That's a trade. Right, okay? I want you to understand 90% of the option strategies that are sold as income generating strategies are not income generating strategies. They're really hedged trades. I don't know how much of my story you remember, but let me tell you something. When I had finished university and I was presenting on television and I had a business and I was spending money like you wouldn't believe. I had the means to. In the year 2000, somebody told me about a book. They told me about this book, Rich Dad, Poor Dad. And I asked, what's that? And they told me, and I thought, I'm going to read that book. And I read that book, and I was so angry, would be an understatement. Not with what he said, but what I did not know. I thought, hold on a second. I'd been to university, did a degree. I was there for 5 years doing a degree in finance and investment. And this one book told me more about growing wealth and creating financial freedom than my 5 years at university. Yes, I'd studied the mindset and stuff like psycho-cybernetics, think and grow rich and all those things like that. But this told me a template, gave me a bigger picture view of how wealth was created. This book's about how rich people create wealth. There's the rules of the poor, there's the rules of the middle class, and there's the rules of the rich. Okay? I'll say that again. There are the rules of money for the poor, there's the rules of the money for the middle class, and there's rules of the money for the rich. And I realized what I was doing was incredibly middle class and not what rich people do. I was abiding to the rules of the middle class. Now, here's one of the things what I learned from this book. Here's what it is. You see this is what the poor people do. They have an income source, right? Let's say they have a job. It gives them their paycheck. This money goes straight to their expenses and then boop, gone. Okay? Here's what middle class people do. They have an income source. Let's say it's their paycheck. This money goes and acquires liabilities. They go and buy a big house. They go buy a nice car. They use their credit cards, etc. They acquire things which their banker will say to them are assets, which aren't. This is Robert Kiyosaki nicely put in that book. Assets put money in your pocket. Liabilities take money out of your pocket. They acquire these liabilities, so the money goes from into the income, into liabilities, pays for all these expenses that they've acquired and their liabilities, their lifestyle, and then poof, gone. And people in the middle class think they're rich because they have a big house. They have a big car. They have this lifestyle. They have a holiday home. Then they think they're rich and wealthy because my house is now worth 200,000, 500,000. My house is now worth $1 million. They think that's wealthy when they're middle class. However, here's what rich people do. Okay? They had an income source, and what they did with this income source was it first flowed into assets, not liabilities. Like the middle class, flowed into assets. They acquired stocks, bonds, notes, real estate, intellectual property, etc., etc. They acquired assets. This then flowed the money into here, their income sources, with dividends, interests, rental income, royalties, etc. This pays for their expenses, and then it goes out. Their income flows that way. There are rules of the rich, there's rules of the poor, and there's rules of the middle class. And I meet people, and they think they're doing what the wealthy people are doing. But they're not. They're not. They're still not doing it. Right? I meet people who are trading and they think they're doing this. And they're not. They're not actually doing that in the slightest. Look, here's the deal. I meet people that have got like a pension or a 401k or a superannuation if you're in Australia. What they don't realise is, yes, it's an asset, but it's let's imagine they've built this pension pot up. And they've got this 401k thing. And it's a set sum of money. And they can draw on this money. Let's imagine they've put, like, it's a Roth, or they did some trading in it, etc., right? And they've now got, I've got £1 million in there. However, that money has a finite life. It can run out. You know what the number one fear in the US is? The fear of running out of money. That when people retire, they won't have any money. They're going to outlive the money. You get the people that do the savings. They've got loads of cash savings. But the money will run out. They think that is the habits of the wealthy. It's not. It's not. Then I meet people who do the following thing. My money's in my house, so I'm going to remortgage my house. So they get debt. They acquire debt. Or they I meet people who live off credit cards. And they have a maximum credit card, and then they max it out, pay off the minimum, and then they move it from credit card to credit card to credit card to credit card. It has a lifespan of doing this, right? So they're trying to live off the house, or they're living off debt. That goes into the income and the expenses, and going, but I'm not working. No, that's not doing it. I came up with this today. I think this is a good explanation of it, right? Of the stages of being financially empowered and financially disempowered, right? Number one being the most financially disempowered. And I know some people would look at number one and think, surely that's empowered. No, it's not. Number one is you with no income, and you're dependent upon someone else giving you money. What happens if that income source from them dries up? Okay? You're not financially empowered. Somebody else is. Somebody else is, right? They could cut. I know many people who are in that situation out of choice and desire. But if something happens to that income source from that person, or they decide you're no longer in favor, then you become incredibly financially disempowered. You are under the control of somebody else. You, with no income, dependent upon somebody else giving you the money. Right? Number two, only just a little bit better is you with no income source, but you're trying to get one. At least you're taking financial responsibility. At least you're taking financial responsibility. Now, let me go back to number one. You get that in couples. And there's an agreement, for example, one person says, I'm going to make the money and you're going to bring up the children. And they've made an agreement. And that's fine. But you have to understand it's because one of them is raising the family empowered, and the other person is the wealth builder, financially empowered person. and they work as a unit together. But and one person will pay the other one for raising up the family. And the other one pays the other person for creating the wealth, right? But understand, where you are most empowered in that situation, you also have a disempowered part, and you've teamed up with somebody to make your disempowerment an empowerment within your unit. Okay. Now, so that's number 1. 2 is where you've got no income source, but you're trying to get one. 3 is you working for your money. 4 is you working your money to make you money. That's you working your money to make your money. 5 is your money working for you to make your money. And 6 is the rules of the super wealthy. The rules of the super wealthy. When I say super wealthy, I mean super wealthy. They create money. They create money. They create money. They create the assets that create infinite income. That's true wealth creation. Okay? So, for 99% of people trading, they need to realize that trading, you're working to make your money make you money. Let me go back where that is. That's number 4. You working your money to make your money. That's where you are. The real asset that you have, if you died, for most people doing that, the asset is the capital in the account. That is a finite life. Understand this. Trading traditionally is focused primarily on capital gains. Financial freedom comes from cash flow. That's point 5 and point 6. Financial freedom comes from owning income generating assets. You want to own assets that generate an income for you. Your money making you a money, or you create assets. You create the wealth. You create the value that create an infinite assets, infinite wealth, and infinite financial freedom. Trading is a job in some ways. For 99% of how most people are doing it, it's a job. And here's what most people's aspirations are. I want this money to give me a nice income so I can have a nice lifestyle. And you know what most people do with it? And so I could buy that big house over there. They'd end up buying liabilities. And some people say, no, I want it to buy assets. I'm talking about what most people's dreams and aspirations are. I might not be talking about yours, but you need to understand. This is how most people think. They come to trading to have more income because they think more money is going to solve their problem. They need a mindset shift. They need a mindset shift. That is not the solution to the problem. It is understanding point 5 and 6 is the solution to the problem. And taking what money you earn and turning it or buying income generating assets. That is how you get off the rat race. That is how you win the money game. That is how you become financially free. Hi, it's Patrick Stockhausen here. Did you enjoy this episode? Good. Because if you did, there's 2 things that you can do right now to continue your journey. The first thing is you can subscribe right here, right now to my channel on YouTube. And I'll keep sending you on a regular basis, on a weekly basis in fact, information, powerful information to transform your trading behaviors and transform your wealth and trading mindset. Plus, you will get specific things that you can do to become a consistently profitable trader. And all you have to do is press subscribe right here on this YouTube channel to get that information sent to you every single week. The second thing that you can do this right now is you can go to takingstock.biz, sign up for any of the priceless free trainings. When you subscribe, you're going to get literally hours of priceless free trainings. Updates on my latest findings, what will empower you to create the results that you desire, and everything else that we do not do on this channel. If you'd like to do that, just go to takingstock.biz, B-I-Z. Do that now. I look forward to seeing you in the next video. Till then, empower your mind, empower your financial life, so that you can live your version of an inspired life. Take care for now. Bye-bye.